Bitcoin is the best asset. There is no second best asset. Buy Bitcoin. Keep buying Bitcoin. Don't sell the Bitcoin. Ignore the noise. The truth is, other people with either less information or less awareness, if someone studies Bitcoin for an hour, then they will watch the news for 1,000 days, and they will have 87 moments of anxiety during which they'll sell the Bitcoin. And so Bitcoin has a lot of those people. Like, they heard someone say buy it, and then they buy it. But if you would buy it because someone said it's a good idea, then you would sell it because someone said it was a bad idea, because you're not making your own decision. You're basically reacting to the crowd or sentiment or emotion.
This summary distills the insights from a Coin Stories podcast featuring Michael Saylor, Executive Chairman of MicroStrategy, a prominent advocate for Bitcoin. Saylor discusses the impact of Spot Bitcoin ETFs, the long-term investment thesis for Bitcoin, and its role in the broader economic and political landscape. This is essential information for investors seeking to understand Bitcoin's potential and navigate the evolving cryptocurrency market. Saylor points out that Bitcoin is not only competing with gold as a store of value, but is also starting to challenge the dominance of S&P 500 index ETFs. This suggests that investors are increasingly viewing Bitcoin as a core component of a diversified portfolio. He argues that traditional investing is often inefficient and requires specialized knowledge. Investors must sift through countless options and rely on analysts' recommendations, which can be time-consuming and unreliable. Bitcoin, on the other hand, offers a simpler approach: buy and hold for the long term. The key to understanding Bitcoin's investment potential is recognizing it as digital money. Once investors grasp this concept, they realize that the optimal strategy is to accumulate Bitcoin and hold it through market cycles. Saylor's biggest lesson from the bear market is that Bitcoin is the best asset to own. He advises investors to buy Bitcoin, keep buying Bitcoin, and avoid selling it. He stresses the importance of ignoring short-term market fluctuations and focusing on the long-term value proposition of Bitcoin. Investors should avoid making emotional decisions based on news or market sentiment. He contrasts informed Bitcoin investors with those who react emotionally to market news. Those who have studied Bitcoin and understand its fundamentals are less likely to panic during price drops and more likely to hold for the long term. Arguments and their implications for investors. Before we delve into the video, if you want the latest crypto news, market updates, and expert insights from the top minds in the industry, be sure to hit that subscribe button and turn on notifications. Stay informed, stay ahead, and never miss an opportunity in this ever-changing world of the financial market. Thank you for subscribing to our channel.
Bitcoin is the best asset. There is no second best asset. Buy Bitcoin. Keep buying Bitcoin. Don't sell the Bitcoin. Ignore the noise. The truth is, other people with either less information or less awareness, if someone studies Bitcoin for an hour, then they will watch the news for 1,000 days, and they will have 87 moments of anxiety during which they'll sell the Bitcoin. And so Bitcoin has a lot of those people. Like, they heard someone say buy it, and then they buy it. But if you would buy it because someone said it's a good idea, then you would sell it because someone said it was a bad idea, because you're not making your own decision. You're basically reacting to the crowd or sentiment or emotion. So a lot of people make investments based upon a recommendation from somebody else. And in the non-Bitcoin world, that's almost essential, because there's 10,000 stocks. Most people don't study. How many people spend 100 hours studying each of the S&P 500 stocks? Nobody. Okay, so if you own one of them, how many people spend 100 hours studying one stock that they own? 98% of people don't spend 100 hours studying the one stock. The stock analyst, the person that covers Apple, they spend 100 hours and everybody else kind of outsources the thinking to that person and says the analyst put a buy rating on it, so I'll go ahead and take their recommendation, I'll buy the stock. And when the analyst puts a sell rating on it, they sell the stock. And that's understandable in the 20th century economy, because in a world where you have to sift through 100,000 different investment ideas to figure out what to buy and sell, you can't possibly do it. A dentist doesn't have the time to sift through 100,000 things. Okay, why do you have to sift through 100,000 different things in order to actually avoid losing all your money? And that's because the money's broken. Okay, so in a world where the money is broken, where there isn't a money, where you can just buy the money and wait forever and have it go up, in that world, you're an investor and you're running your own hedge fund. And of course, most people don't have the time to run their own hedge fund, so they're the worst of all worlds. They're taking the risk of a hedge fund, but they're not putting the effort in to run a hedge fund. And even if they did, I mean, how many 65-year-old retirees, have the ability to do stock analysis on 500 different stocks? Like, I would argue almost none of them. So in this particular case, Bitcoin is a new asset class. It's digital money. Once you understand it's digital money, and you probably get there somewhere between 100 hours and 1,000 hours. Once you understand it's digital money, then you realize that the strategy is you just buy it and keep buying it and don't sell it until you have to pay a medical bill or until it's an urgent life or death matter where you just have to sell it. But otherwise, you just keep accumulating and you wait for all of the chaos and entropy and inefficiency and disorder that undermines every other asset to take hold. The longer the time goes on, the more difficult and the more disorder there is, and the more people appreciate the value of good money. So I wasn't bothered by the volatility. I was just waiting, for nature to right itself. And I think that the biggest mistake you can make is become insecure. Is it money? Is it not money? Right? Once you've made your decision, you're committed, then you're just thinking if the price is low, that means I get to buy more. I expected the ETF launch to be successful, but I think it's quite impressive just how successful it's been. At this point, we can see that these ETFs are going to surpass gold ETFs in not too long a time. The Bitcoin ETFs are the most successful ETF launch in 30 years, and apparently in the first 30 days, they outperformed every other ETF. They've crawled to the top of 3,500 competitors in short order. And I think that they have sparked the bull run and the upward movement in the price. I mean, definitely there's a huge amount of institutional capital flowing into Bitcoin right now that is driving the price because of asset scarcity. I think the most important thing, or the most important result of this, is the ETFs themselves represent regulatory clarity for Bitcoin as the institutional grade crypto asset. I think that's a very important thing. I think secondarily, the ETFs represent an on-ramp for institutional money, and they open up a gateway between $100 trillion or more of institutional money and Bitcoin. I think the third thing is they have sparked this price action, and as Bitcoin moves back toward its all-time high, they have generated an extraordinary amount of media coverage and Wall Street awareness, and Bitcoin benefits from the awareness of the asset class, because as of now, 99% of the mainstream investors really have an incomplete understanding of Bitcoin, and the best thing that we could do is just build awareness that it is an asset class and then people will start to do the work to understand what it is. And so all three of those things have been catalyzed over the past month by these ETF launches. The ETFs are just another application of Bitcoin, and there are thousands and thousands of applications coming. So in this particular case, 1% of Bitcoin, 1% more assets kind of flowed into the ETFs. It boosted the price of Bitcoin in the last 2 months by $20,000 a coin. And that means that 99% of the $200 billion of market cap got created. And something like 99.7% of the benefit was for the people that didn't own the ETF. If you think about it, and once you do the math, the ETF people bought in at 40,000 and drove the price to 60,000 and have 1%, and everybody else had the other 99% and their Bitcoin is worth 60,000. So in this particular case, if that's taking over Bitcoin by basically making all the people that don't use ETFs $200 billion richer, right? Then you probably want that to happen 100 more times. You'll see other apps. At some point, an insurance company will build Bitcoin into an insurance policy. And then companies will build Bitcoin into their balance sheet. And then a country, and if a country that you don't like buys 1% of the Bitcoin supply and drives up the price by a factor of 2, it'll be another example of every other country getting 99% of the benefit. So as people embrace the Bitcoin network, and as they build applications on it, and as they invest in it, it's impossible for them to take it over, because the network outside of the new actor is actually getting more powerful at a faster rate, and it actually empowered the non-ETF holders 100x more than it empowered the ETF holders. So it's not a fear I have. I think that every single new participant just makes the entire network better and more successful, and empowers every other type of Bitcoiner.
Michael Saylor presents a compelling case for Bitcoin as a transformative asset with the potential to reshape the global financial system. His insights, particularly regarding the impact of spot Bitcoin ETFs and the importance of long-term investing, are invaluable for investors seeking to navigate the evolving cryptocurrency market. By understanding Bitcoin's fundamentals and adopting a patient, long-term approach, investors can position themselves to benefit from its continued growth and adoption. This summary aims to capture the essence of Michael Saylor's arguments in the podcast. For a more detailed understanding, it is recommended to watch the full video.